Hello, hello, hello. Welcome to All Stock Trades. I hope everything's doing well. Again, my apologies, camera's out, traveling, and not near the YouTube studio. But again, this video is going to be very highly intellectual, and it's going to provide a lot of value. So this is going to be going over Q3 of 2023 and also doing an analysis on the price target of Enphase. This is probably going to be one of the most in-depth videos that you'll probably see on the YouTube platform. So please definitely take a listen. So just to give you some proxy of what's happening with the economy, the CPI report just came out. There's inflation is cooling. This is something that we've basically been predicting, based off of the remarks of what the Fed has been doing and other metrics like the M2 money supply and videos that we created a couple days ago that looked into the analysis part of our mastering course that looks at all the Fed data. And you can see that core is 4 and now overall is 3.2%. Inflation is cooling down. I repeat, inflation is cooling down. Again, if you were to have asked the retail investor community space regarding the inflation and how that's related to interest rates and potentially how Federal Reserve now is most likely not going to be increasing interest rates on the next FOMC meeting, they would say that, inflation and interest rates have nothing in common, and retail investors were scared, saying a lot of crazy things about the stock market. And this is called robo, which is retail puts. So whenever retail investors, like let's say, for example, a lot of people entered the market in 2020. So let's use 2020 as an example. There was a lot of fear in 2020. So a lot of retail investors were buying puts. Unfortunately, this was the bottom, right? And what you can conclude of puts is equal to, high puts is equal to the people equaling fear. When you have fear, you have an oversold RSI, which is below the intrinsic value, which gives you to a conclusion, which gives you be greedy when others are fearful. Do opposite of what retail investors do. Do opposite of what average investors do. The average income in the United States is around $60,000. Don't do what the average people do, or you will be average in your life, and you will make $60K and be average and live an average life. Okay? Now, I did make a video a year ago regarding Enphase price target. I said it reached my price target. I'm out. I'm out of Enphase. And yeah, I did it at around $210. Did it run up higher? Yes, it did. But look at where it is now. Again, the intrinsic value calculation works. I got out of it. So now something interesting has happened. The stock literally fell. Interestingly, if you would like a more comprehensive analysis, I've written an article on the Medium account here called Navigating the Currents, Enphase Energy's Q3 Performance and Forward-Looking Strategies and Mid-Market Dynamics. You can find it in the link down below if you want a further expansion of this video. Now, very quickly, yesterday, I actually posted an article. I posted this article to my private stock terminal for them to read. I have been, going in deep into Enphase, and I'm so excited. Literally within one day, the stock is up $11. I mean, like literally, I posted the article yesterday, and it literally just shot up. Definitely part of the original image I just sent you, the CPI. If you're wondering why did it shoot up, it's the CPI report, right? And that was part of my Word document with my intrinsic value calculation that I did in my analysis that talked about interest rates, which we'll delve into. So let's go ahead and continue. So overall, the top view, Enphase Energy went ahead and did a Q3 2023 of revenue of around $551 million. Overview that talked about financial health, market position, strategic responses, and future prospects. So that's kind of what we're going to be talking about here. So the revenue, as I said, was around $500 million. Microinverter shipments were around 3.9 million. The battery shipments were around the 86 MWH, which is I think like a milliwatt hour. Gross margins are around 48% non-GAAP, which is we like to do GAAP, but these are the 48 non-GAAP. Stock buybacks were about $110 million at $130 a share. Obviously, when it was near its 52-week low of approximately $72, definitely undervalued. Now, market analysis: U.S. versus Europe revenue was around 64% and 36% respectively, as you can see on the screen. Regional challenges, obviously, California's NEM 3.0 and Europe's slow recovery. Industry trends, this is kind of a cyclical downturn. You can see it in almost like your Lucids and all those stocks. But again, those are negative free cash flow companies. This is positive free cash flow. But most interestingly here, the high interest rates. Now, why did the CPI report cooling as indicative of a rise? Well, think about it. CPI cooling, inflation is cooling. Fed has a high probability of decreasing interest rates in the near future. Decreasing interest rates combats the high interest rates, causing money to be cheaper, which decreases the discount rate, which increases the intrinsic value of a company. All right. Now, strategic and operational insights, market diversification. They're going into Europe, Australia, Brazil, and India. There are improvements within their customer service and U.S. manufacturing, and they're essentially being able to focus on small commercial focus. Now, financial outlook. Now, this is where the stock basically dropped. The Q4 guidance was around 300 to 350 million. And still trading at 5 times normalized 2024 sales at the time when I was doing the analysis, which is around $70-ish, $72, $73. Long-term growth potential. Obviously, this is a differentiated technology with a strong network. Future growth, ongoing demand of renewable energy, and the expansion of the chip, the green movement energy, and all of the current administration strides into providing more for green energy movement, because that's where we're headed. Now, I went ahead and created this graph, again, created by Albert Allen, CEO of All Stock Trades. Now, what this does is looks at the 10-year revenue of Enphase, obviously Enphase revenue 10-year, and then it goes ahead and graphs the year-over-year revenue growth. You can basically see that the third graph then takes the average of all of the revenue growths, and it's approximately 27 to 28% year-over-year. Bumping up to 30%, I went ahead and did an analysis, and I say, you know what, if it grows half of what we're expecting it to grow, well, let's expect Enphase to grow around 15%. I'll show you my analysis right now. So revenue growth projections was at 10 years around 28%. Like I said, projected revenue growth slows to 15%. This is my assumption. I'm taking a 50% cut, pretty much approximately a 50% cut. Free cash flow is around 30% of revenue. If you look at the most recent metrics, free cash flow is around $800 million, right? I'm now adjusting 2024 revenue to be 1.4 billion. This may not be the case, but again, that's what the stock is pricing, and I'm trying to see if it's undervalued even with these conservative metrics. So by doing a revenue of 1.4 and doing an estimation of free cash flow of 30%, you can arrive at a stock price of a base case of 72.29 to a bull case of 101.17. Again, since this company is free cash flow positive, the probability of ending in a bear or recession is when the whole market is down and you're in a recession, aka where Apple and Microsoft is down as well and going to its intrinsic value since it trades at a premium. Doing this, we estimated the free cash flow at 420 million, when in actuality, their current free cash flow is 800 million. So I'm basically having almost their free cash flow. The base case is $72.29. Bull case is 101.17. My 2-year price target is greater than $90. Well, obviously that happened literally today within a day of me posting it, and within a couple of days of me doing the analysis, it already happened, right? So conclusion, Q3 performance is resilience and challenges, long-term outlooks, strong fundamentals for growth, investment considerations. Obviously, you could get some market share eruption with Tesla, and if they decide to enter the market, you can get some market erosion. There obviously risks exist. I recommend looking at the annual 10K report to look at the risks. Overall, if you look at the stock terminal we have here, this is our proprietary stock terminal, which gives you access to financial information, as well as you having your own pocket artificial intelligent technology designed for your financial literacy needs. You can visit allstocktrades.com, as well as we have a Black Friday sale to get lifetime access, which is literally $1,000 off right now by using the coupon code Black Friday. I hope that this was of use to you all, and I will see you on the next one.